All right, let's jump into it. Where we at? It is 10:36 on 26th of November. So coming into the end of the month there. So maybe could start to sort of expect and see some flows coming through. So 1 second there. I was just telling my battery's dead. All good. Anyway, let's jump into it. So yeah, look, a little bit of data from overnight. It's a bit tough to sort of actually sort of put too much emphasis on these numbers because a lot of this sort of stuff is basically it's stale. It's these numbers are I think at least the retail sales numbers were from September. And obviously we've got PPI here as well, which is the producer price index, which I've sort of covered a couple of times. But obviously with PPI being a little bit weaker, just think about it. It's like PPI is kind of like the wholesalers, so it's just a little bit further up the trough from the consumer, the CPI. And if we're seeing a slight little decrease here, well, actually, it was an increase. So, as I said, when are we going back from? 40 days delayed. So I don't even sort of really know where to apply. But in theory, if these were just the numbers you're looking at, 0.2% was the expectation, came in a little bit below expectation there. So would be naturally weak for the dollar because if we're not seeing inflation show up with these guys, in theory, then there's not going to be any need or requirement or anything for them to pass on down to the consumer. So the CPI would also reflect a somewhat weaker number. Look, it's not a guarantee, of course, but that's the theory behind it. So with inflation being lower, or well, maybe not increasing as quick as they sort of maybe had been pricing for. Well, and also we actually look at the core there. The core as well came in line, but even though this one was revised down, that also came in lower. In theory, it's not like okay, inflation's an issue, so there is a cut possibility on the cards for that bit of data. And again, you're just putting it in one camp, one or the other. Same with the retail sales here. So retail sales figures are down. So 0.6% expected a little bit of a tick down to 0.4%, came in at 0.2%. Again, less money in the system, or less people sort of out there spending money. Couple of things with that sign of obviously sort of a little bit of fear, I guess you would say, because they're like not fear is the right word, but if you think about it, sort of like when you when you're finding things a little bit more difficult, do you pay your bills or do you go out and sort of buy stuff retail? So you pay your bills or or you hold on to your money and keep it in savings. So again, that's kind of like okay, well, it could be seen as a sign of a bit of a sort of like uncertainty, not so happy in the sort of economy, and also the sort of weaker retail sales can then lead onto weaker growth, weaker GDP numbers as well. And again, what would the central bank do with that? Well, they'd be more inclined, if they were to be doing anything, they're not going to do something just off the retail sales, but were they inclined to be doing one or the other, well, they'd be more inclined to be sort of in the sort of dovish, more cutting, sort of help stimulate, push things along kind of camp, which is again weak for the dollar. And so with these two bits of data, if that's all we had to really sort of go off, which I guess kind of it is, because it is about the time that we saw the dollar break down overnight, we saw the dollar pull back, and so that's the data sort of feeding into that. On top of this, we've got Richmond Manufacturing Index. Really put these manufacturing indexes have the ability to really sort of fly around. So I wouldn't sort of hang my hat too much on that sort of bit of data. But yeah, we did see the dollar sort of pull back off this data that we did have overnight. Through the session today, our big one is the Aussie CPI. We also have the rate decision from New Zealand, but one by one. So expectations for the Aussie CPI are slightly up a tick here. So Aussie is actually in quite a sort of a rough sort of position. I'll get to it on the chart in a moment as well. But the broken structure, and it's got a slight little bounce off the lows, but it's a pretty weak looking bounce. I'll get it to it with the charts. And I think really, look, it technically closed on its daily high, but it's a really tight range. It's unable to catch a bid moving back into like above previous supports. And yeah, it's not looking too good for the Aussie. So if this comes in hot, maybe you get a little bit of a push up, but I think the overall structure will reign supreme with it, and it'll get sold into. If it comes in weak, well, Aussie, the bottom's going to fall out of Aussie, and we're going to look at 64.20 tests again and potential break lower. New Zealand, look, I mean, just for an idea of what's happening with them, they're just cutting very aggressively. If you, I covered this the other day, look at this steep sort of pull up of that sort of when they started the hiking, they were really high, 5.5%, and now they're steep coming back down over here. So, yeah, I think potential sort of more weakness for the New Zealand dollar there. Some of this can sometimes have flow-on effect to Aussie. Not overly, but I do find sometimes like Canadian data can affect the US dollar. The pound, like GBP data, can affect the euro, and Aussie can affect New Zealand. And they kind of sort of work in little pairs like that as well. And I suppose maybe even you could say the same, not really so much, but the Swiss franc and the yen, maybe, but that's the correlation between those two. They're both sort of at their heart, which is actually kind of funny with them at the moment. At their heart, they're safe haven currencies, the Swiss franc and the yen. But the yen, BOJ has been sort of negative rates for God knows how long, and the Swiss National Bank are potentially have been for the last couple of months of flirting with the idea of going negative rates as well. So they're supposed to be safe havens, but not really sort of displaying the characteristics of it so much. Um, Employment claims is through the rest of the day, not really too much, nothing through Europe. And then tonight we got employment claims and durable goods. Employment claims, I've covered this a couple of times. In the 20s, I still think it's okay, dollar supportive. Should this push up into 30s? It's a bit of a question mark. If it goes into the 40s, like 240 plus, you'll see dollar weakness off this, in my opinion. So 220s, I think that'll be seen as okay. That's acceptable kind of sort of rate for it all. Durable goods, not really something that I really sort of cover a great deal. Again, look at the 30 days. So all these bits of data, it's going to take a month or two, probably early into 2026 to start to get reliable. Well, I mean, is the data ever really reliable? I don't know. But, what we can actually work off and sort of say, okay, yep, this is something, month to month, we can sort of work off what the previous month's numbers were. We know what the expectation is, we know how relevant it is, and so on and so on. Change in the total value of new purchase orders placed by manufacturers. So again, higher numbers are generally a sign of more positive sort of stuff. This is looking like a bit of a slowdown here, but again, take these bits of data with a grain of salt. All right, let's jump on the charts real quickly. I'll start off with gold because we got this big break on gold on Monday. And we're right flirting with this line down over here. And this is going to be a crucial level because, albeit this a bit of a sort of choppy chart, you can see this triangle is really starting to confirm and hold up a little bit, which means a couple of things. One, if we do happen to see a push up the top over here, you're going to be coming into some resistance. And I imagine this falling resistance to play its part. I put this little line in here because technically, if you were looking at this and going, and this is just it's not what I think will happen. It's just how potentially people could see it. This could be a consolidation for a flag break, which would bring you back up to these highs over here. The thing with this play, though, should this come and work out like this over here, is I think this triangle breaking will be a lot more significant than this little consolidation to flag break. And this is based on the idea that dollar would be a fail, which I'll get to in a moment with the US dollar, which potentially we could be on the cusp of. I don't think it's going to happen. I'm not positioning myself for that happening, but again, that's what could potentially happen. So from the weekend, we was flirting with this line down over here. So I had two levels, 40-30, which is obviously this sort of like horizontal here. It was a little bit over here, but it was a big resistance point breakout a couple of weeks ago. This is the first trigger line, 4,000 on the dot was the confirmation. So that was the trade that I was looking for. To get under 40.30, get to 4,000, break 4,000, opens the floodgates, and we come all the way down over here. Obviously, we didn't get to 40.30, rallied from 40.40, and then bang, all she wrote, boof, moved up to the top side there. Interesting thing with metals recently is that they've been running like they've kind of detached from the dollar. So this big push up through here, at the same time we had the dollar flat, and then when the dollar was pulling back yesterday, gold didn't capitalize and use that to be able to break out higher. And I think that's a tell in a certain regard because these things run basically. Look, I just pick the numbers, but in my mind and the way that I sort of tout it is what I call 90-10, which is 90% of the time they'll run inverse to each other. It's reliable. 10% of the time they'll run concurrent. So as in they're both up or they're both down or one's up or one's flat, and you know what I mean. It's not in its normal relationship, but the thing is, it will revert back to its normal relationship. And I think that's where the opportunity lies with these things because it's not a clear cut thing to sort of say that, hey, dollar's definitely going to run. Of course, everything at the moment is actually very choppy, up and down question mark, which makes things difficult. But as I said, you plan for both scenarios. That's the way that you sort of kind of avoid getting hit too hard. You don't go into it with a straight, solid bias that it's definitely going to be this or it's definitely going to be that. You go in and go, look, as I said in this, if a bull case for this would be this being a flag up here. Okay, that's fine. Play that out. If that's going to be a flag and break out there, what possible issues might it run into? Well, this big, ugly, daily falling resistance triangle that it's working off, that could impede this move here. You've still got part of this triangle to fill out over here. And these things sometimes can really come down to the wire. So we could see this, even if it does break down here, rally up, push back down, and this is a possibility to really push out to the corner, to the tip of this thing over here. I mean, 4010, 2011, 12, whatever, it's been a very strong level. You can see here, support, support, support overnight. On the flip side of this has been the resistance that we've been dealing with through here as well. So this is going to be a crucial level to see what happens with gold. The thing is, though, with the break below here, same with the thing up here, what happens? Well, potentially you come back in and you find yourself support on this rising support, which we've seen a number of times. And this is why this triangle is really going to be a very crucial dictator, in my opinion, for the next major move in metals. I do believe if we do get a break this way, you're probably going to see a big run. I'm not in that camp. I think it's more likely, and the risk is more that we get the push down to the bottom sides over here. As I said, this is kind of where I'm looking around the sort of 37.50 mark. Again, you got to break 4,000, you got to break 40.30, you got to break 41.10. There's a lot of levels to get through before you get down here, of course, but that's the general idea as I see it at the moment. If this breaks above this triangle, and then obviously if it takes out 42.20, well, that's not happening. We're seeing consolidation. We drag out the price targets there, and we look up until 4,500 or so. That's a possibility there as well. So it's really just about sort of like planning for both scenarios and then sort of trading towards, all things considered, what direction you think the market may be taking these sort of assets in. So where we're at the moment, that's a bit of a ramble of the whole thing. Where we're at the moment, obviously, is a bit of a consolidation. So we got the breakout on Monday. If you look at this on a daily, it's a doji. And a doji is indecision. Market tried to move up, that's fine. Tried to move down, that's fine. Bang, pretty much closed close to where it opened. Couple of takeaways with this. Monday, obviously, you finished quite bullish. So you're always going to see at least at minimum a little bit of a potential attempt to sort of continue that move. Obviously slapped on the nose, boom, boom, boom. We'll see what happens. RSI isn't super strong to support this at this stage. It is technically still in this direction, so it has the ability to go up over here. But as I said, I think there's more of a chance of this coming down, particularly if we break under, say, 4,110. I think that's when we see a bit of a move down. Doesn't necessarily mean, as I said, we've still got some area to fill out in this structure, but I would say you're probably looking for a $30, $40 move down towards 4,000, 4,060, 4,070, this kind of area over here before we see support. I imagine this move here to pretty much be undone, at least to this body fill, which is weakly open. Now, if we do get here, I imagine a reaction from here, and then we'll play that by ear at this point here. Reaction, maybe second effort. Second effort will take you through this rising support. Then your next target is that 40-30. Well, say 40-40, 40-30. These kind of levels down here. So that's gold sort of moving forward with it all. It is kind of indecision, but I think this thing's just going to go boop and then undo this move over here. I couldn't really see a massive catalyst for this move, other than sort of like, Fed rate cut expectations slightly ticking up. We were kind of almost 50-50 last week. I think that's dropped down to, I think it was a 19% or something chance of a cut, of a hold now, sorry. Actually, let's have a quick look. Pop this just here. So this is where I can't remember where this was. Yeah, 15% now. But as you can see, 1 week ago, 18th of November, it was sitting around 49.9%. What was the dollar doing when it was doing that? Well, the dollar was absolutely ripping. We're getting the big breakout, sort of broke through that 99.7, and then bang up, lower numbers are sort of consolidating. Like, this isn't the gospel, but it is kind of an idea of sort of how the market's sort of viewing it. And obviously, the one of the big drivers, not the only driver, but one of the big drivers is rate expectations as a move. I've covered this a number of times. The biggest moves come prior to the rate decision, not when the rate decision actually happens. So yeah, it's indecision here, but I'm looking for the downside here. Have a look at silver just while we're on the metals. Look, if let's put on this 4-hour here. So on the weekend, we had a couple of things to take away. First of all, was this level here. I said, look, I want to see a close underneath 50, closed at 49.98 or something like this, whatever. Pretty much, I said, look, it's too close to call. You can't really call that kind of thing with it all, because you had a close down here, 49.20s. Well, that's a solid close underneath this bottom, and we can see it go down here. And this is the same thing I always say with structure. Support, resistance, look for continuation. Yes, you came down, but because it closed back up here, it means it's a question. So you've either got range, or you've got, well, it's not really a high low because you did make a lower low there. But the point is, you could see a little bit of a flow on and that continuation of energy coming up through there. Now, question is that it? Is this the thing here? I think it is, yeah. Because this was the level that I said on the weekend that I wanted to get short, 51.40. I said, if we see a move up higher through here, this is most likely where it's coming to. It came there, overshot it a little bit, danced around it a little bit. But it is kind of a 1, 2, 3 kind of rejections through here. I'd say a move down back underneath 51 will sort of confirm that we're probably going to be coming back down over to these levels over here. Just while I do have it on the screen, I don't do curve lines, but I thought that was interesting. It's a weird sort of shape at the moment, structure. Like, you got lower lows, you technically got lower highs, but there's not really any straight line you can apply to it. And this is what I mean. This is why it's very choppy at the moment. It's not just this market. Like, all these things are very big sort of question marks. The market is waiting and poised for the next big move. And what does it do while it waits? It chops people up, which is fine because this sort of suits my style of trading very well, because I'm in and out, in and out, in and out, and I try to stay as unbiased as possible. But if you're trying to buy and hold this thing, you're just either getting stopped out, taking losses, sending yourself crazy. Like, you know what I mean? Oh, shorter from here. Look, that's a great move. And what'd you do? Bang, you stopped out and stopped out. You know what I mean? So, while it's doing this kind of garbage, the market obviously doesn't know what direction it wants to take it quite yet. And so we just got to wait for that next move. But the next move will probably continue for a month or two, whether that be down or whether it be up. As I said, I keep saying I still think that we have lower sides to come. but you know, anything is technically kind of possible. Um, US dollar. All right, so a couple of things to unpack with this. We had 4 days, I think. If we put this on the daily, 4 days, 1, 2, 3, and we're on the fourth here. Fourth day, consolidating at the highs, and then we failed. And if you have a look where did we start? Well, we're kind of drifting down a little bit all the way here, but that data, where did it come out? It's like 12:30. So it's this one here. So we're already kind of drifting. Obviously, we had this was a support. Now it's a resistance. This 100.2 level. That data came out. Bang, sold down. Rally effort, sold down. Blah blah blah. Dribble, dribble, dribble. Okay, that's fine. This was the idea that I was thinking. Look, continuation, consolidation favors continuation. It does. Obviously, nothing's 100%, and this perfectly sort of shows that. What we can sort of unpack from this is a couple of things. One, that, and I said this to a mate, I think either yesterday or the day before, that the longer that you sit here without sort of breaking up, the more people are gonna get their back up a little bit and go, okay, maybe it's not. So consolidation at the highs very much favors continuation, but the fact that it was 4 days, and then okay, yeah, they just used the data as the catalyst, whatever, but 4 days without continuing, you're going to see, think about it. If you've bought this and you're like, yep, cool, I'm holding, I'm holding, I'm holding. Yep, it's going. Yep, it's going. Yep, it's going. By day 3, you're probably starting to sweat a little bit. Day 4, you're like, nah, book some profit. Doesn't mean that the whole thing's failing and falling and coming down over here. It does create a question mark on things, but it does sort of, it's not sort of beyond a sort of, whoa, how did that happen kind of move. You've got profit. I want to see this thing go consolidate and then next leg up like this. People start to get a bit scared. They're like, hey, let's book some profit just to be on the safe side. Then the data comes out. Okay, bang, comes back down here. So look, it's not dead, but it does create a bit of a question mark because now we've got this kind of problem. And if you look at this again, it's the same with the structure. Resistance, support. Tackle that high, break through, cycle starts again. Resistance, support, tackle that high, unable to break through. So where does it put the emphasis on now? Well, really, structurally, it puts the emphasis back on these lows down over here. And the reason I say that opposed to this channel support through here is because when you don't respect the channel both sides, i.e. this move didn't come up to the top over here, it kind of negates the channel a little bit. It'll probably still get some reaction because any move down here is obviously still coming into this horizontal. So you still have a little bit of a confluence around here. But really, an early indicator of a break of a channel is failure to continue. So the fact that it didn't come up, touch this side, and then sell down means that we could start to see this thing potentially roll over. And again, it's just about sort of considering both sides of the market. It's not everything's bullish one way and that's it, like perma bulls or perma bears or whatever. These kind of people, they're destined to fail really, unless you're just, going to buy something and hold and just not really trade. But that's not what we're doing. We're trading. We're not investing. So it is a question mark here based on that kind of structure. However, a little sort of caveat for this is on the 4 hour, we've seen that this 99.7 level, this area, has been a very strong resistance. This is what gave us the breakout, remember? When was it? Last week, 18th or so. Remember, 2 seconds ago, I showed you the rate expectations were 50-50. And what did the market do? It bought the shit out of the US dollar because it's better than it had been prior. Now we see the rate expectations come back. Well, what happens? US dollar comes back. As I said, it's not the gospel, but it is a bit of something that can explain these moves. Anyway, so where we are technically at the moment is in a back test of this area here. So for me, I want to see the market hold this area. We could see it tried to bounce it. I think this will be the area for it to hold. If we can hold here, then I could see this as potentially being back test of this breakout point. Emphasis is back on this level of 130, and then you could potentially see some continuation there. Because although the sort of it didn't hit top bottom, I mean, look at this kind of move here, top bottom. This one failed to continue there, but then goes back up and goes over here. So it doesn't go in a straight line necessarily, but the fact that sort of like these things, if this breaks this line, put it this way, if you fail to continue with structure and then you break that line, that's the confirmation. Consider this an early indicator. If it comes back here and breaks it or tests this line before it tests this line, I would say it's going to break through there. That's my feeling. And so it's got a little bit of space here at the moment. It's got a little bit of leeway. But I would like to see this hold 99.66 kind of area to keep it in potential of being dollar strength into the end of the year. I think this is kind of like you can justify it. You can explain it with that little patch of weak data. You can explain it by 4 days of consolidation without the continuation. People book profits. Just because it didn't continue now doesn't mean that the whole game's over. But people go, well, I'll take my money off the table. Boom, 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 boom. Now the question is, what are the buyers going to do? Are they going to step up here and take it? Or are we going to see even more profit taking of it coming down lower? That's what we're trying to sort of work out at the moment. But to me, in the short term, I want to see it hold this level here. If we break lower, I question it, and potentially we could see some more upside with metals. Aussie has CPI today in 28 minutes. Now, Aussie's in a very rough position. It's broken this big triangle, which respected a number of times on both sides. It did come down and test that major breakdown level, which I've been touting for ages, actually a long time. All these drop downs, 64.20, 64.21, that was a level, and came down here, tested it, bang, big reaction. But this is not a big sort of bullish bounce. You wouldn't see a structure like this necessarily put in a big massive candle up here. Like it just wouldn't sort of look right for it all. If you look at how these things respond as they've been coming down, you're getting big expanding candles moving up. Off the lows, big move off. Off the lows, big move off. You know what I mean? Like this is kind of just looks like a very feeble effort of little small things before it goes and rolls over, boom, and comes down like this. So should we get a weak number towards towards 3% or so, then I would imagine Aussie to probably get hammered. At least minimum test these lows again, potentially break them. Reason being for that is that, look, one CPI is not going to change the course of things. So we're not going to get a rate cut in December based on inflation being lower today. That's my feeling. Though, if we see that inflation isn't as much of a persistent problem, it means that the rate cut, at least maybe one more, could still be on the table. With inflation at 3.5, expected 3.6, there's no cut. They're not going to cut at 3.5% or 3.6%. So hold is their only mentality. And that is obviously a little bit, in theory, sort of supportive for the Aussie dollar. So if they have some sort of higher number, you should see Aussie pop up a little bit. Then the question is, well, what's the US dollar? What's the market doing with the US dollar? So if the US dollar then rallies, that's going to mean that Aussie data local pushes us up. General market consensus is buy US dollar. Our local data takes a back seat to US movement or sentiment across the market. It'll get sold into. So really, I think the risk for Aussie is more to the downside here. Broken structure. If we get a low print, if we get a low print and the US dollar runs, it'll break 64.20. That's my call. If that combination happens, so we've got a couple of things. We've got If US dollar rallies plus low inflation, that'll send it down. US dollar, okay, so US dollar rallies, that'll send it down. Low inflation, that'll also send it down. So you got a double whammy there. If we get sort of a high inflation, potential up, US dollar runs, that'll be your sort of play. If, and I don't think this, I'm not planning for this one, but yeah, again, you got to plan on all these things. If we get high CPI, moves up, and US dollar continues to sell down, that will be your play. So it's, and this is what I mean. It's sort of like you need to add in sort of local data with the sentiment of the market towards the US dollar, and that's pretty much denoted by what's happening with DXY, and that's how you use sort of DXY sort of when sort of trading Aussie, even though it's kind of not part of DXY. So I do think we have downside though, open to the idea that we have a high print which gets a pop, and then if we get a pop, I'll be looking to sell into that. So that kind of movement. All right, and move along. Copper being very resilient, held that sort of support all the way through here, like to the line. Head and shoulders, I thought it was going to work, hasn't. It's come up too high, negates that kind of move. Back onto horizontals. So with all these angles and shapes, and I don't like calling them shapes, but you know what I mean, head and shoulders, these kind of things. If they don't play out, just revert back to horizontals, in my opinion. The horizontals will always work. Here are the buyers, there are the sellers. Where are the buyers progressing? Okay, now they've given it up, bang, and goes into a stall. And as you can see, pretty much, for the most part, it's just consolidating. I think still this is the line to beat, 496 on the downside, but I haven't traded copper for a while. I've said this a number of times due to these ridiculously big out of the nowhere moves. I think it's a bit of a risky asset to sort of trade at the moment. And then we got China breaking, not looking too good. And the reason I say this is because it's not only just that we had an incredibly shocking day yesterday. How many times can this thing test the bottom side here before it actually gives way? We'll have a look, or I'll have a look later as to sort of what what's it called? The PBOC set their midway point at, but they have still continued to hammer this thing quite strong, coming in at like 0.78 for their fixings. So it's at 0.78 here, but point is generally, if you have an idea of where that is, if it's in 7, say slash dot teens, then you could see it moving up a little bit, but this is not looking particularly good, and this is a weekly support as well that it is breaking through here. So, we could be on the way, look, 704, but then sub 7. That is a very big possibility of that move through to here. So, very much at the moment. That is not looking like a great chart, and it does look like it wants to come down lower. Not really anything that's overly usable, sort of with that in terms of angles there. All right, that's it from me.